What it do? What it do? It's your boy, Train the Trader. We back, baby. Part 3, bringing it to you. It's Friday night, and I'm here for y'all. I am here to teach. I am here for y'all. I am here for y'all. If you're watching this, I appreciate you. Hit the like button. Subscribe. Tell somebody. Bring it up in conversation. Watch the video. Whatever you got to do, ladies and gentlemen. It's about spreading the word when it comes to this investment stuff. This investment game is a life changer. Don't want to drag that out too long. I don't know how long this video is going to be. I'm going to try to make it short, but we'll see what happens. Y'all know how I get. Here it is, part 3. How to grow your investment account from 0 to 15,000. Part 3, we're covering how to find quality companies to invest in. This is the meat and potatoes, ladies and gentlemen. This is what it's about. Now the fun starts. We start doing the research. Now we're getting ready to pull the trigger. We want to load the clip, get ready to bust. That's what this is right now. So we getting into the fun stuff, in my opinion. But let's get it. Let's get it. Part 3. So let's go. Let's get a quick recap here. What we did in part 1. Starting from scratch, the rundown, how to get started, where to get started, what the stock market is, what long-term investing can do for you, the compounding effect. The point is invest early, stay for the long haul, watch it grow, keep it pushing. Let's get it. Part 2, we talked about the mindset, the mentality. What mindset you should have when approaching the market. Is the market for everyone? Yes, we answered that. What kind of work are you doing on yourself? Have you started reading yet? Have you looked into some companies that you want to invest in? Are you tuned in at CNBC? Any books you checked out? What are you doing for yourself? And then what I don't like about the market. There wasn't a whole lot. I love the market. It just is what it is. I love the market, ladies and gentlemen. I know it's a game changer, something that's going to help me and my family for the long haul. So I'm in it for the long haul. Part 3, what are we discussing? Let's get to it. Starting capital. Dry powder required to buy your first stock. What do I mean? How much money does it take to buy your first share of your first stock? We're going to go over that. And it really just depends on the company, as you'll see. Next topic. What resources I use for fundamentals and company data. Fundamentals is the data, the backbones of a company, where you can see balance sheets, cash flow, revenue, all that sort of stuff. The key data I want to look for when doing fundamental research. The key data that I look for when doing fundamental research. Got a little tripped up. What things do I look at? We'll get into that. And enough data already. When do I buy a train? We'll get into that. I'm going to show you guys how to look at some charts, figure out good opportunities to buy. So we're going to do a little bit of fundamental research and then finish it up with technical analysis on the charts. Let's get to it. Let's get to it. Let's get to it. I'm excited for this one. Let's go. So, when it comes to starting capital, dry powder is another word or another term used in the finance industry for cash sitting on the sideline, ready to be deployed. So, when it comes to how much capital you need, it's really simple. What you're doing is you're looking for companies that are quality companies that you can afford at the time. So remember, I said I started my investment career in the stock market with $500. That was the first deposit I put into my account when I started. Now you can see ExxonMobil right here is $119.88 for one share right now. So I would have had enough for 4 shares with that $500. Not very much, but it's a start. And that's what it takes. I believe my first purchase stock purchase was actually Apple. I think it was Apple, if I'm not mistaken. And I bought Apple somewhere for like 164. You know what? I'm wrong. I'm lying to y'all. I'm lying to y'all because Apple was too expensive. So I had bought, it was either Land or Glad. So Land is a REIT, real estate investment trust. Okay, let's just go to it. I'm gonna show you guys how we do this so I can do this live and show y'all how I do research on a company. So right now we're on Yahoo Finance. This is my main source for where I look to find information. There's some other ones, Bloomberg. Some more news. You can get a lot of news. They have subscriptions though, so if you want like all the data up to date, check out Bloomberg, but you got to pay for it. Google Finance is another resource. With these three resources, you can find all the data you need on a company to know exactly what you're getting into, what they look like, how healthy the company is, that sort of stuff. I use Yahoo Finance. It's just what I started with. It's what I know. No real bias. It's just what I use. But I do use Google Finance as well. And I actually use Moomoo, the app Moomoo, because I really like that app, man. Moomoo, they do a lot of great things, a lot of really intuitive information. The app is really easy to use. And I actually mentioned this in the first one. If we go back here, check me out. Moomoo. I thought I was playing. Moomoo, 5.1% savings on dry powder. Y'all remember that from part 1. Moomoo is a great app, but I use that a lot for news. They got a great earnings calendar, and yeah, I like it. So if you got it, you know about it. If you don't, try it out. It's free. Can't hurt, right? But yeah, back to it. I think my first company was Land. So it was cheap. It was all I could afford. I just wanted to get in the game. Wall Street Trapper was one of the people that I first listened to when coming into this game, and this was one that he talked about. So I did my little research on it, what I knew at the time. So what is Glad? Glad is a REIT, real estate investment trust. REIT right here. So how do we look at the fundamentals of a company, and what are some things and some key data that I look at in fundamentals? Well, first things first, if you're gonna invest in a company, one of the first rules that I learned when it comes to investing is don't invest in anything that you don't know anything about. Now, I had did a little research on this, but I'll admit, I didn't know much about it. I didn't know much about really any companies when I first started. A little bit, but not a lot. So, as I grew and got into it, I learned what the pros were looking at. And here's what it is. Things like revenue, total revenue. Good way to track how much money they got coming in. Profits. Right? That's another one. Net non-operating interest income. This one is a good one. This one's a big one. This is one of the main things that I look at. Net non-operating. All right. And as you can see, what we're looking at is the annual right now. So from 2020 up to 2023, this TTM right here stands for trailing 12 months. Trailing 12 months. All right. So we can see over the last trailing 12 months, they are down negative 23 million. Now, I know some of y'all are probably looking at this like, that's not 23 million, Train. What you talking about? But, ladies and gentlemen, part 1, we talked about this, all numbers in thousands. So we got to add 3 zeros to all these numbers. So that's 23 million down, right? Major company, big corporation. So it's not too far-fetched to see that at 23 mil. So what are we looking at here? Net non-operating interest. What I'm looking at is to see if this number has gotten better over this time period or worse. And if we look at it, you guys can see why I no longer hold this company. There's just better investments out there. Look at their net non-operating. It's increasing in negativity. It had a little space here, maintaining, but it's not looking that great. Okay. And I'll show you an example of another company to compare this to so you can see what I'm talking about. So let's just go to the first one that popped up right here, NVIDIA. NVIDIA financials right here on the left. Now, net non-operating interest. Look at this, guys. Look, and this is why, oh my gosh. This is why NVIDIA is so cold-blooded. Negative 127 million. Negative 207 million. Uh-oh. Big turn right here from 2022 to 2023. 5 million. Okay, things looking on the up and up. $609 million from one year to the next. Now, a lot of this has to do, we won't get it too far into this, but if you don't know about NVIDIA, they are a semiconductor company and they are doing major things with these chips that they're producing, and how it's fueling into the AI movement and all that. Gamers, these are the chips they use in like graphic cards and stuff like that for games. So they're doing a lot of business right now because people are just clamoring for this AI and all these chips to be able to push these softwares with the AI. So they're the leading semiconductor company in pretty much the world. So this number right here is crazy, but look at the revenue. Look at this total revenue and how that reflected. 16 million, even though they were negative down here on net non-operating. $16 million. 26 million. Or excuse me, ladies and gentlemen, I'm totally wrong. 16 billion with the B. 26 billion. 26 billion. 60 billion. Crazy numbers. Crazy numbers. Who knew chips made so much money? Now we do. So total revenue, important. Net non-operating interest, important. One you'll see in here on TV, EBITDA. And I just figured this out, so I'm gonna do this for you guys. Watch this. When we go to Google Finance, we can go to this right here, and I like this little tidbit, so I'm putting y'all on game as I'm figuring it out. Right? EBITDA right here, you hover over that, it gives you the definition and the meaning. So EBITDA, earnings before interest, taxes, depreciation, and amortization, is a measure of a company's overall financial performance and is used as an alternative to net income in some circumstances. That might be straight gibberish to some people, but it's not super important to know exactly what the acronym means. More so, just know that it's something that analysts look at, the pros look at EBITDA as a measure of just kind of how a company is doing, the healthiness of a company. So as we can see with, this is Waste Management, what I have it on, but if we go to NVIDIA, go down here, check out their EBITDA, we can see it's up 732%, folks. Lord of mercy. That's great. That's fantastic. All right. Now let's go back to Yahoo. Let's go back to Yahoo Finance right quick. So we got to the EBITDA. Now let's go to their balance sheet here. Balance sheet right here in the middle. Total assets, so you can track if they are gaining and growing in asset accumulation. Ooh, how y'all like them verbs, them words right there? So we can see things like tangible assets, working capital, total debt. So if you want to track a company's debt, there you go. Ordinary shares issue. I don't really pay a lot of attention to this sort of stuff, but it's good to know if you need it. And then last and certainly not least, cash flow. Cash flow. This is one of my favorite things to look at, and one of the first things I look at when I go research companies is free cash flow right here. Free cash flow. So we can see Nvidia has increased their free cash flow over the last 4 years. And boy, have they. 4.6 million, 8.1 million, 3.8 million. Probably purchased a lot of things right in here. And look what it did. From 3 billion to 27 billion and running. Ladies and gentlemen, that is free cash flow. Means that after all their bills are paid, all the employees are paid, all interest, all whatever, all equipment, all that is paid, this is what they have left. Free cash flow. So a company that has $27 billion of free money laying around can make some moves. That's what's important to know. Not only that, but it shows that they are, with this revenue that they're bringing in, a healthy company that has a lot of revenue being generated and increases cash flow is a great sign of management. Okay, is the debt under control? Yeah, debt's gonna be under control, but they buying a lot of stuff. It takes a lot of money to create the machines and manufacture these chips. So I mean, what company doesn't have debt? You just want to see it not out of control, and you want to see that their operating cash flow is solid like this. You know, you want to make sure that their debt is not overwhelming their operating cash flow. And if they have free cash flow, that's a positive sign. That's a positive sign. So everything looking on the up and up for Nvidia. But let's go to another one. Let's just look at something random like, trying to get one off the map. Let's do 3M. Triple M. Now 3M company, a lot of people may know 3M because they do a lot of like tape and hardware goods like paint brushes and just things that you use around the house. Safety mask. I said tape. You know, all that kind of stuff. If you really, really want to know, just go to profile right here. Scroll down and you get a description of what the company does. Look, I told y'all I wasn't playing. Look, 3 companies, safety and industrial segment. Boom. I may not know all the things, but I know a little bit of a little bit. Closure systems for personal hygiene products, masking, packing materials, electrical products. I mean, everybody's seen 3M products somewhere, somehow. May have not known it was 3M, but they do everything. They're in everything. They do everything. So let's get it. Let's check out these financials. So this is what I do. I've never looked at 3M's financials. So this is what I'm looking at here. Like I said, let's see what their free cash flow is. Free cash flow. Okay. I mean, they, you know what I'm saying? 6 billion. You can't really shake a stick at that. Kind of drop some. Maybe they purchased something, but it's maintaining. Operating. We losing a little money here. Not much. Let's go to the income real quick. Let's check out this income. Total revenue. Annual, guys. So this is over a yearly basis. 2020, 32 billion, 35 billion, 34, 32, 32. So it looks like something happened between 2021, 2022. Maybe they purchased something Maybe they had a product launch, maybe some R&D, who knows? But they're not really hurting for money, as we can all see. Net non-operating interest. Okay, here we go. Boom, boom. We're getting a little bit of lag here. Something to keep an eye on. Okay, increasing to the negative. EBITDA. Yep, something's happening. Look at this. Something is happening. From 2020, 9 billion to current trailing 12 months, negative 6 billion. Interesting. Check out this balance sheet. Total assets. They own some more assets. What's this debt look like? Debt's actually, net debt is decreasing. Okay. I wonder what's going on. We may have to check some news. I'm not gonna do that right now in this video, but I'll have to look into that later. Here's another tab though. Hey, use your resources if you're trying to figure out what's going on. Look at some stats. You got financials, you got the analysis, sustainability, and the most important to me is the charts. What's going on with the charts? So we talked about starting capital a little bit, but as you guys can see, if you wanted to buy a share of 3M, it's going to cost you $92.27. You know, so it's like that with every company. Every company that you're going to look at has a purchase price for a share of stock. Microsoft, boom, $399.12. Home Depot, $335.36 for one share. How about Pepsi? I know y'all be out there drinking them Cokes and Pepsis. Why not buy a share of stock? $174 is all it's gonna cost you. Who else we got? ExxonMobil. I'm just naming random companies at this point, folks. $119.88. You guys get the picture. So back to this 3M. Covered the starting capital, where to find companies to research. You got your Yahoo Finance, you got Bloomberg, you got Google Finance, you've got Moomoo. So you have plenty of places to do some research on companies. After you get the key data and you find that, when do you buy the company? Right? Enough of all this data, enough of all this chart, or not the charts, but enough of all these numbers and blah, blah, blah. Let's get to the charts train. All right, bet. Let's do it. So we're looking at 3M company. And now the first thing I will say, first thing that pops out to me on this chart, and this is a 2-year daily chart right here. So every one of these candles on this chart is a day. That's how you want to read that. See that? So every candle is a day. That's a day, that's a day, that's a day, that's a day, that's a day. You guys get it. So over a span of 2 years is what this chart is laying out. And the first thing that I noticed when I opened this chart was this. Boom, 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 bam, 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 bam. Is that pointing up or down, ladies and gentlemen? It's pointing down. We are in a down trend on 3M. Now, although we see downs, we see ups, we see way downs, we see back up, down, back up, down, 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 up, and up. So, excuse me for that. It's Friday, y'all. I'm just being goofy. But we see this is in a downtrend. We see this as a downtrend, clear downtrend. If we draw a trend line, which is this right here, what I did, it's pointing to the downside. Now, we know that last earnings here, earnings 2.309 versus 2.42. So their last earnings report, they actually beat earnings. So there's some, I don't know what's going on with 3M. Solid company, been around forever. Maybe this isn't one that you want to invest in, but when is what we're talking about. When would I, as an investor, buy into this company if I was interested in 3M? Well, what do they say in the stock market? If you don't know, I'm about to tell you. Buy low, sell high. So I can tell you right now that regardless of where we are on this chart, where I am not gonna buy, and it's gonna be in places like this, it's gonna be in places like this. These are places I'm not going to buy this stock. Why would I? If the game is to buy low, sell high, then that means if we're on a high, I've got to wait for a pullback. That's what they call that. So I'm waiting on this price, 92.2 right now, to drop down to probably this range in here. $75 to $80 range is where I would be looking to buy a share of 3M. Now we can do this all day, ladies and gentlemen, and this is what makes long-term investing so easy. So easy. I can't stress that enough. You find companies that are making money like we just saw on Nvidia. And let's go to an Nvidia chart, because Nvidia is actually in a fantastic place right now to probably be a buy. We all know that they're printing $600 billion a year. And in an industry that is, some would say, new with this AI push, right? So this company is going to continue to be the leader in semiconductors. So what did we talk about in the episode in part 2? The mental side and what it takes to be an investor long term mentally. You buy low and you sell high. Companies that are quality companies that are making money are not going anywhere anytime soon. This is natural for companies to go up and then down, up and down, up and down, up and down. Now, it just so happens that Nvidia has been killing it. And I mean, absolutely, call it Eminem songs to be murdered to, killing it. Right? Like, look at this run. Look at this run from $471 up to $974. And that's in, what is that time span? Because I was in this the whole time watching it. That is this year. That's the beginning of the year. So from the beginning of the year to March 7th, March 8th, that is insane. That's insane. And a lot of people don't even know this company exists. Do you realize how many millionaires were created off of this run just this year? This is life-changing movements right here. If you catch a piece of this and you are smart about how you trade it, to ride a stock from 400 up to 974 in 4 months is absolutely crazy. And there's a lot of people that bought up here at the very top, ladies. There are, I guarantee you, there's a ton of people that bought equity shares of Nvidia at the top. And they're now sitting through this retracement that we all knew was coming. So you buy low, you sell high. Now, when it comes to long-term investing, we're not selling in 4 months. That's ridiculous. That's not how you become financially stable. That's not how you become wealthy. You don't buy and hold companies like this for 4 months and then expect to get some money coming 10 years from now, right? Like, that doesn't make sense. So when you find companies that you want to invest in, you find charts, you go into your technical analysis like we're doing here, you figure out where some points of common interest are on a chart, right? Where have we touched multiple times? And my little zone here kind of helps out because you can see we touched this level, boom, 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 4 times. So this is an important level when it comes to technical. So what does that tell me as an investor? That, okay, if I was in and looking for at NVIDIA around May 29th of last year, then okay, I'm looking at this and I'm like, okay, bam, okay, we get a touch and then it runs. Maybe I'm looking at buying here. Well, I gotta wait. You gotta wait. You have to wait because you don't buy at the top. And mind you, we didn't know any of this had happened yet. So the chart kind of looks like this, you know. It's got here, got up to the top. This is not where you want to buy. This is not where you want to buy at this moment in time. You want to wait on a pullback. So watch how this works. Bloop, bloop, bloop. Little pop up, little pop down, little pop down, little more pop down, and bam. You see that? Look what happened. Touch here, rode up, rejected off of what they call resistance or a supply zone. That's deeper. We'll get into that later. Came back to that demand zone and look at that green candle. Look at that green candle right here. This was your buying zone. Even anywhere on this candle, you'd have been straight right up until here. This is a buy area. So this is where you would have wanted to buy. Now we scale this out on a larger scale like we are here. These areas become more clear to see, do they not? So I bet I could now, if you just listen to that little piece that I did, you could go to another chart and you should be able to point out where in the areas that look interesting to you to buy. So let's go to something random. Let's go to Nike. Oop. NKE, that's me. Nike. So, based on the chart, give yourself a second. Tell me where you would buy. Look at this chart and tell me the areas you think that you would want to buy a share of Nike. Now, we all know Nike's a solid company. Of course, they're going through something right now. We can find that out through the news outlets, right? So we're going back into our fundamental analysis. Nike. Good type this. Nike. What they got going on? Shit, look, check him out. Excuse my language. Let's check them out. Let's check them out one time. Check them out one time. See what they got going. All right, total revenue. Okay. Looks like we're increasing annually. Okay. Looking good. Net non-operating interest. What we got? Negative 89 million. Negative 262. Oh, bad year. Negative 205. 6 million. 136 million. Okay. Things are on the up and up. What do we got? EBITDA. Okay, maintaining. Nothing crazy. A little increase, a little dip. Still maintaining. Let's go to free cash flow. My favorite. Free cash flow. Check it out. 1 billion, 5 billion, 4 billion, more. Looking good to me. Okay, well, it looks solid. We know Nike's a quality company. Been around for a minute. Great management, innovative. Shit, they sponsor damn near every team in every professional league when it comes to uniforms and all that. Great company. I love Nike. Where would you buy? Let's do some plotting here. If you're if you are on point, then you would be looking at these areas to buy. Right? This is where you would be looking to buy. This is where you would be looking to buy. Oh, this is where you would be looking to buy. Y'all picking up what I'm putting down here? Notice every plot that I'm drawing. Where is it? In comparison to its colleagues when it comes to these candles. Right? Bottoms. We buy at bottoms. We buy at areas of consolidation. Look at this. And this is a somebody probably charged $1,500 for what I'm doing right now to teach y'all this. Just FYI, like this is real-ish. Okay? Look at this. How many times do we come to this area? Up and through it. Touch it again, through it. This is a major price point and area for Nike. Right around the 100 to 103 range. Up. And look where it happens to be right now. Guys, this is a buying opportunity on Nike. If you are wanting to get in Nike long term, this is a good opportunity because we're still at the bottom third of this range. If we draw a range from here to here, we're still at the bottom third of that range. That's a good area to buy. And we know it likes to populate around this 100 and break through at times. Boom. Let's go out further. We can go to a 5-year weekly chart. So now every candle on this chart is a week. Is 1 week. This is a week. This is a week. This is a week. That's a week. That's a week. That's a week. That's a week. So, am I lying, folks? If I'm lying, I'm flying. Look at this. If you were interested in buying Nike and we know to buy low and sell high, are we not in a great opportunity to buy some Nike shares right now? In comparison to where it's been in the past, I would say absolutely yes. Now, this is almost a triple bottom. Hell, I might need to look at going long on this and some calls and options. We made money on this and on the Honey Drip network like 2 weeks ago. I had to get back in. Anyway, so you guys see it. When it comes to finding quality companies, how do we do it? I think we answered that. You go to your resources, your Yahoo Finance, your Bloomberg, your Google Finance. You go to these places, you type in the ticker symbol, right? NKE. Bam. I'm tripping. I think it was already there. What about Boeing? Boeing's going through a whole lot of stuff. They suck right now. Boeing. Plane parts falling off. Whistleblowers dying, getting murdered. I mean, oh man. Boeing, they're gonna make a movie on this Boeing shit that's going on. Like, mark my words, they're gonna make a movie on this. In like 10 to 15 years, they're gonna make a movie on this. Especially if they come out hot and they get through all of this and get back on top. Back to the reign that they are in the airlines industry, they're gonna make a movie off of what's going on right now. But Boeing, 169.82. Finances. Ooh, they're actually up. Look, revenue up 10%. Net income up 97%. EBITDA up 31%. Cash flow. Let's go to cash flow. Oh, we got some choppy waters, of course, because of what's going on. They're going through it. Ah, look at that. Look at that. Look at that. Negative 4% on free cash flow. Income's up though, 96%. I mean, Boeing's a big dog. Let's not get it twisted. Boeing got a lot of stuff going on in the news, but when it comes to the like who they are and what they do, like one of two manufacturers of planes, like I don't know if they really going nowhere anytime soon. They got a pretty good hold of market share. So we'll see. Hey, they're just gonna have to get through all this nonsense with the planes falling apart, but I'm sure they'll figure it out. Let's go to the technical side right quick. Check out BA if you are wanting to purchase one share of BA Boeing. That look like a bottom to you folks? That look like a bottom to you? It does to me in comparison to this. Right? And this is the weekly still. I mean, you could maybe wait for this area if you're wanting to purchase something closer to 130, 135. You know, maybe buy one now, see if it drops, buy another one here. It's for the long haul. So remember, we're thinking years, we're thinking 10 years, we're thinking 5 years, we're thinking years from now when we're planning on readjusting our portfolio. As long-term investors right now, what we're trying to do is just accumulate shares of companies. Over the next 5, 10, 15 years, just buy as many shares of companies that you like and that fit your portfolio, as many as you can. And when do you buy them? You buy them when they pull back. Buy them when they pull back, right? Pull back, buy. Going up, going up, going up, going up. Pull back, buy. Pull back, buy. Pull back, buy. Pull back, major buy. You see what I'm saying? So once you start understanding what is going on with a stock's fundamentals, you can then go to the technical side of the charts and find key price areas of where to buy your long-term shares of equity in that company. I hope this makes sense. I try to make it really simple. I hope you guys got something out of it. I probably went a little longer than I wanted to, but I can go on and on and on about this all day. I really need to watch my time, but it is what it is. I hope you're tapping in and learning something. Remember, like and subscribe. Share this with somebody. Ask some questions. If you guys want me to do some more specific, detailed videos on beginners outside of this, let me know and I'll put it in the queue. But if you made it to the end, I appreciate you. I love y'all. Y'all have a great weekend. Be safe. Don't do nothing that won't get you to your destination of investing. The goal here is 0 to 15,000 and grow your investment account. Create some wealth for you and your family. The goal is not to go out here and do something stupid and continue to shoot yourself in the foot so you never make it to 15,000, 20,000, 50,000, 100,000, a million, 5 million, 10 million. Whatever your goal is. Be smart. Be smart with your money. Be good stewards of money. That's how you get more of it. Be good stewards of information. That's why I'm doing this. So share this with some people. Do some research for yourself. Help yourself out and win this year, ladies and gentlemen. There's too much money to be made. As we see from this NVIDIA. If y'all think that I'm not getting paid off of these moves, y'all crazy. I've been knowing about it. I'm trying to put y'all on so y'all can start getting some bread. If that's what you want to do. If so, tune in, like, subscribe, holla at your boy, ask me questions. If not, y'all just gonna watch on the sidelines as we get to this bread. It's your boy Train the Trader. Friday night, bringing y'all nothing but straight heat rockets. I'm signing out. Peace, love, profits. It's your boy Train the Trader. Out.